Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, May the 16th. Today, we got retail sales month over month, 0.4% in the positive. We were expecting double that, 0.8, but at least we are in positive territory. The previous one was minus 0.7%, and excluding autos, we have also positive numbers. And year over year, 1.6 coming down a little bit from 2.4%. This is good for consumer spending and demand, but is maybe a little bit tough for inflation. But right now, markets are focused on avoiding a recession. So every data that comes in showing consumer spending on consumer sentiment going higher, that's good for the markets. Industrial production, 3.5%. We were expecting flat. So good news on the industrial production month over month and year over year, going a little bit higher, again in the same direction. Manufacturing production still in the negative, but at least cut in half the minus 1.8 that we got previously. And month over month, coming in positive territory, we were expecting barely 0.1%. So this is again showing signs of manufacturing, production, avoiding recession. That's the key to really understand what markets are doing. We also got Fed Mester, Bostic, Bar. I have, as always, several different statements that I would like to share with you guys with the typical format that I started doing yesterday. So let me show you a little bit the kind of things that I think might be interesting for you. So some statements for today from the Fed Mester: high inflation has costs. Let me take last point. High inflation has cost over both short and long term. That's obvious. We are worried about inflation in the short and also in the long term to avoid recession and to avoid big impact in the economy. Inflation is not good. It's good for the economy in terms of business, but it's not good for consumer spending. Higher pricing for everything is not good. Whatever media says, the current trend points to a slow, long run of economic growth. Two key words: slow growth. That's worrisome. There is 4 weeks to go until next FOMC meeting. We need to see more data. Again, Fed focusing on data driven. I don't think we are at that hold rate yet. I can say we are at level to hold given stubborn inflation. So they recognize that inflation is sticky. And again, look at this. Markets are saying that they are going to pause. Fed Masters is not sharing that opinion. They don't think we are at that hold rate yet. We know that part of total rate increase has not affected the economy yet. We have to wait to see the real effects of these high interest rates and also the credit crunch that banks are already saying that they are doing. Some effects of monetary policy yet to play out in the same line, and the Fed needs to stick with what it's doing to curb inflation. Trust the Fed. Don't trust certain markets that are saying that we need support. Economy, in my opinion, is strong, and they think that they have to stick with the plan. We are going to see more from Barkin. Demand is cooling, but not yet cold. We were talking about demand destruction in my past videos. Please give it a go and take a look at that kind of point of view to understand the markets regarding demand and supply. Demand destruction is really real, and we are going to see that on copper a little bit later on. I'm still looking to be convinced on inflation. So Barkin is not convinced about inflation reaccelerating. They don't trust inflation. There's a lot of data until the June FOMC, plus the debt ceiling. They acknowledge that debt ceiling might be a bigger issue than initially expected. Commercial real estate, CRE, Well, acronym, you have to really understand what is commercial real estate in terms of credit for banks. It's not an unknown vulnerability, but it is one that I am focused on. Be really careful with this commercial real estate because they need credit, and if credit is tightening, commercial real estate risks are real, and Fed are acknowledging that. I expect unemployment rate forecast to come down. That's an expectation that would be really bad for the markets. I think they need to see labor market to start softening. Job market is still quite hot, is the key here, hot. It has not softened yet. Businesses, this is a real one. Businesses will not give up pricing power unless they are forced to do it. Do you know the meaning of corporate greed? I've been talking about that. I'm sure you already heard that on the media. Corporate greed is everything on the inflation. They are pushing prices without any justification. So Fed are really pushing these businesses to stop doing that. We have to force them to stop doing that. If more increases are needed to bring down inflation, then I am comfortable. The number one lesson from the 70s is don't quit too soon. Don't quit too soon. They don't want to pause to see again what happened in the 70s, that inflation go back up again and they had to start again raising rates. That would be a disaster. Fed's bar. The Fed is looking carefully at CRE risks. Be careful with this one. CRE risks. We have to be on top of that. And last, Fed Williams. Inflation is unacceptably high in the economy. Unacceptably. Inflation is moving gradually in the right direction, but it takes time for Fed decisions to have an impact on the economy. We already know that. We have to wait and see how the economy really reacts. There's a lag in the actions from the Fed to go through the economy. The current banking situation is nothing like the 2028 banking crisis. Banking system is sound and resilient. This is like a mantra that they repeat more and more. So that's really interesting what I have for you on that, on those statements. And let's talk about that debt ceiling. Debt ceiling is still under negotiation. Today, we are expected to see at least some news regarding that, but Treasury Secretary Janet Yellen, it's already warning and putting a lot of pressure on the Congress to really go through that race on the debt ceiling. A default would crack open the foundations upon which our financial system is built. Wow, apocalyptic. It is very conceivable that we will see a number of financial markets break with worldwide panic, triggering margin calls, runs, and fire sales. Wow. I mean, I agree with that, but it sounds catastrophic. But because it is super catastrophic. US defaulting could be a total disaster. Let's turn the page and talk about Home Depot. Home Depot reported earnings today. Why I'm focusing on this? Because Home Depot posted its worst revenue in 20 years. Lower forecast, and this is due to demand destruction. I've been talking about that. I'm sure you heard about that. Consumer spending is lowering. Demand destruction is real, and it is impacting businesses and also things like Home Depot, because consumers are delaying big projects, so they are buying less, basically. And why this is really worrying for the markets? Because it shows consumer demand is lowering. Again, another point of data that shows that consumer is showing demand destruction. Huge revenue miss. So be really careful with this. Another one that is showing demand destruction on the consumer spending. At some point, something will break because money will stop flowing into the markets and into the businesses, and we will just pause. We will just pause. So let's now go into the charts. Let's start with the Nasdaq as always. Really, really big move on the Nasdaq and beautiful technical move. I'm sure you are going to really like this. This was the London Open. I like to talk about London Open. That's 3 a.m. London Open higher and then consolidating lower. We got the news on retail sales. And look at this volume. Point of control was down here prior to open. And look at this pivot. I was long at this break of pre-market low with volume at the bottom. This was a nice accumulation of the bottom for the break of this local pivot into the break of retail sales news. That was my first target, but I saw something really interesting. Look at this price action. Price action right below 30-minute resistance. This is the red line. Also right below settlement and right below pre-market high. So we were waiting to see if we had the strength enough to push higher. We push higher. I added somewhere around here with my target at this daily level blue line that was this 13,514. That was coming from at least that the Qs, that level is not on the futures. So if we go back, my day was done in just, that was 15 minutes. 2 contracts, and I think that was like almost 90 points. So almost $2,000, more than $2,000, I think. 2,400. And I basically locked in profits, and we got a really interesting pullback. And we started trying to break again beautifully, respecting this resistance that we got after the first pullback. And then resistance came in as support. Nothing is exactly, we got some lower points, lower weeks, but overall, look at this trend. This trend is really strong in terms of direction. It's quite choppy because we are at critical levels. That's last week high. That's a daily level, and we are at year-to-date highs. All this price action is year-to-date highs. So if we check year-to-date chart, we are at new levels. We are trying to squeeze higher. And that's why we are finding so much resistance. That doesn't mean that we cannot break levels, but Nasdaq is really trading quite technical on support of those fundamentals that we talked about. Let's talk about the rest of the market. First, copper. I told you, be careful with copper. Copper is bear flagging into a ascending support on the daily. We might see the target around here, 3.56, this zone of support on November last year. So what is copper telling us? Copper is telling us that worldwide there's less demand. China is having real issues on the manufacturing and the production, and copper is feeling the pressure. So overall, economy is slowing down. But tech is in its own world. But at some point, that's my bearish sentiment, at some point we are going to retrace. Timing is everything. But right now, we do have confirmation with copper that overall economy worldwide, we are seeing slowdown. Are we going into recession? That's why markets are focusing on the data that is showing recession or strength in the economy. It's not everything about inflation, it's also about recession, and also on top of that, the debt ceiling. Something else, gold. Gold hates interest rates. Gold is minus 1.50 on the day with a huge candle breaking down previous support. So I think we might see some buyers recommitting around this level of support, 1980, something like that. But be really careful with gold because looks like Feds are determined with inflation. They might increase rates again. So that's why gold is pulling back a bit. It's not yet in a bearish mode until we clearly break these lows, these weeks, but it's converging with our own analysis regarding the worldwide economy. Dollar is continuing higher after these two big candles showing breakout after accumulation. I think dollar it's slowly but surely trying to find buyers. Look at this pullback being bought up, and dollar is a nice play. I think dollar might be a good play. Other markets, risk on or risk off. Let's talk about Bitcoin. Bitcoin is showing kind of weakness. We are hovering around that. So markets are not convinced regarding growth, not in Bitcoin and not in the Russell. Russell today is minus 1.17. Bitcoin is minus 0.63. The issue with the Russell, the small caps, is that we are in the middle of this range. We are in nowhere land. So there's no edge that we can have from this chart. So we have to talk about yields then. Yields are again stacked. They are stacked in this range also. The 2-year yield is stacked, the 10-year yield are stacked. There's nothing really putting any pressure to find direction on these markets, either selling off or either ripping off. The only thing that is growing steadily is the Nasdaq. Tech is really pushing these margins and this growth. If we check Apple daily, we are still trending, grinding higher. I still have 176 as this big, huge target. This is a magnet, guys. Microsoft, super strong, leaving huge gaps behind. Again, another magnet. It's not only this pivot, it's a zone, a big zone of. This is February last year. So look at this move on Microsoft. And remember that Apple and Microsoft account for maybe like almost in between 20 to 30% of the Nasdaq and on the S&Ps. Wow. Tesla, well, Tesla is having its own issues, so let's talk about that other day. Amazon breaking this pivot. Amazon trying to break 114 towards 121. Amazon has a lot of potential to the upside. It's consumer discretionary. So Amazon being 2.65 shows that that retail sales number is something that you have to take into account that shows strength in the economy. Google, 3% on Google. Wow, again, another magnet, 122 from August last year. And then we have this zone at 124, that previous support was resistance, and now we are towards that test. I mean, there are some stocks in the Nasdaq that are showing a lot of momentum. Despite the fact that I'm still bearish overall in the midterm for the economy, there's no doubt that tech stocks are really strong. Nvidia, I mean, look at this. Nvidia is insane. From this bottom, not even the low, till today, 111 on a 700 billion market cap. That's insane. Insane. Nvidia is really pushing these levels to 689. I mean, 300 it's a psychological magnet. Right? So look at this move. So all the tech is pushing today the Nasdaq. Even though I am bearish, I can really see these setups from a technical standpoint, and I will trade those. But don't get discouraged if you are trying to short this market. There will be opportunities to short this market. I tried a lot, but there's no doubt that if you are trading tech, you have to wait and be patient in order to successfully short this market. If not, just have these signals, have these levels, and wait for those opportunities to go with the trend. The trend is your friend. Right now, I think the day is more and more having a lot of risk due to a lot of volume up here. I don't think going much higher is it's something that might happen. You can try, but be really careful if you were long, because right now there's a lot of volume taking profits up here. We might see already the sign, but congratulations if you took this kind of setup in Amazon, Google, Nvidia. If you are trading tech, if you are long, you are making cash. And I think that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos like this one, market updates, market recaps, market forecast. I will try to provide a lot of news for you and understanding on the markets, some nice setups and different markets, convergences, divergences to really try to show you how the sentiment is overall and how I see the markets for you to take some opportunities. Thank you for your time as always. Remember that the trading day is not over yet. We have squeezed a lot and we broke really nice, beautiful breaks levels like 3,500 on the Nasdaq last week high, and also we are at year-to-date highs, so be really careful up here. Don't be the one holding the bag and lock those profits. Remember that discipline and risk management are key for success. Stay safe everyone and see you tomorrow.